3% on your checking and savings accounts. Is it too good to be true? Well, for Robinhood, that might be the case. A key industry watchdog says they didn't know about Robinhood's plan to offer checking and savings accounts with those 3% yields. We bring back Kate Rooney from CNBC.com to follow up on this from yesterday, Kate.
Yeah, well, that was the first thing you guys said. What's the catch? And so we called Stephen Harbeck, who's head of SIPC. He said he was just as surprised as anybody to hear about the Robinhood news. So obviously they had not contacted him. He said that they had not contacted the SEC. And considering that they had spent 2 years planning this, it seems like a big overlook. Robinhood has not responded to a couple of requests for comment. Neither has the SEC. But one of the big issues is that these accounts, he was saying, are not meant to be checking and savings accounts. If you're insured as a broker, they're assuming that you're going to put that into securities at some point. So.
Right. I mean, that was the whole thing with Robinhood. That's what Baiju Bhatt said, right, in that interview, that basically they're going to take this money and they're going to trade it, not trade it with cryptocurrencies or anything like that, but even with treasuries. But that's still trading money, and that's still basically like a brokerage account.
It is. So I called Barney Frank, who we all know from Dodd-Frank, knows this subject better than anybody, and brought up the issue of the risk here. So he was saying, yeah, they're going in the direction of the Federal Reserve, but if for some reason interest rates don't go up, will they be incentivized to look to riskier assets?
Absolutely.
Higher yielding, you know.
But that gets to the core of it, because even by investing in treasuries, but if they invest it safely, they won't make enough to cover 3%. Right. If they reach, then they're bringing into issue the viability that SIPC now has to back. So SIPC is going, wait a minute, and if they for 2 years they didn't play and they never consulted with them, I'm very surprised by that.
It's surprising, absolutely. And the idea that this high yield, like, how are you going to keep up with that? And we talked about it yesterday, the Amazon approach of growing quickly, but it's not clear that SIPC is prepared for this 5-6 million person growth in these accounts. And so Steve Harbeck said he was very concerned that they hadn't done anything to alleviate his concern. He seemed annoyed.
Pretty strongly worded response to that this morning.
Yeah. And UBS as well came out with a note this morning saying they covered TD Ameritrade and Charles Schwab, saying the same sort of thing. They said the details are thin of the product, just came out, but based on what they understand, it seems potentially risky, that they are skirting a risky ploy that is skirting very close to actual banking and therefore could draw regulatory scrutiny.
Which it already has.
Yeah,
absolutely.
Its debut.
Yeah, exactly. Story will continue to follow.